Welcome to the deep dive. Today we're tackling a question that's probably top of mind for a lot of investors. Is Apple stock, AAPL, a buy right now?
Exactly. And to really get into it, we're looking at an analysis from the Motley Fool. It's dated April 17th, 2025.
Okay.
And it gives a pretty interesting snapshot of, well, all the forces acting on Apple's stock in this current climate.
Right. So if you're following the tech world and, the big players like Apple, this should give some valuable perspective. We're going to unpack the main arguments, the data points from this Motley Fool piece.
Yeah, try and get a clearer picture.
Okay, so the article starts off by saying Apple stock took a bit of a tumble in 2025, down, 20% when they wrote it?
Yeah, a pretty significant slide. And the main reason, according to the analysis, it really boils down to worries about tariffs.
Tariffs. Always tariffs.
Well, yeah. Investors were nervous about potential tariffs from the Trump administration on imports from China, which is, huge for Apple manufacturing.
The main hub, basically.
And not just that, but also potential reciprocal tariffs from other trading partners. So hitting them from different angles.
A potential double whammy. I saw a number in there, a proposed 125% reciprocal rate. On top of an existing 20% from China, that's, wow.
It's a staggering number.
Yeah.
And you have to think, what would that actually do to the price of an iPhone or, MacBooks, everything else?
Yeah, the ripple effect would be huge.
Huge.
Yeah.
It fundamentally changes their costs. And then the question is, how much do they pass on? Can they pass it all on? Would people still buy?
Big questions. It definitely spooked investors, seems like.
Understandably. That kind of price hike could seriously hit demand.
But, okay, the story develops, right? There was a twist, something more recent mentioned in the article.
Yes, exactly. A really crucial development. The analysis points out an exemption that came through.
An exemption for what?
For key tech stuff, smartphones, computers, processors, displays specifically from those reciprocal tariffs on China.
Okay, so that must have been a bit of a relief for Apple.
A significant relief, you'd imagine. For them, and frankly, the wider tech industry, given how reliant everyone is on China.
Still, it sounds like Apple was already trying to anticipate things. Making moves.
Yeah, they seem proactive. The article mentions they reportedly shipped, 1.5 million iPhones from India to the U.S.?
To beat a deadline, right?
Seems like it. Trying to get ahead of potential tariffs, it shows they were taking the threat very seriously.
But India wasn't totally clear either, was it? There was talk of tariffs there, too.
Good point. There was a 26% tariff rate mentioned for imports from India. Now, that got paused temporarily for 90 days.
Okay, a pause. But not gone.
Exactly. So even with the China exemption, the situation with other manufacturing spots like India was still, uncertain, fluid.
So the article's take is basically, even with that pause, this whole tariff saga isn't over yet. Uncertainty is still hanging in the air.
Pretty much. That seems to be the key theme, uncertainty.
So let's talk impact. If those tariffs had hit full force, how bad could it have been for Apple's business?
Potentially very damaging. Like we said, higher costs usually mean higher prices for consumers. That could really slow down sales growth.
Did they estimate the potential hit?
They referenced a Morgan Stanley estimate.
Yeah.
It suggested a potential negative impact of around $7 billion to $8 billion.
Wow. Billion with a B.
Yeah, just on iPhone sales. And that's even if they manage to shift a lot of production over to India.
That really drives home how reliant they are on China, doesn't it? What was the figure? 80%.
Around 80% of production capacity in China? Yeah, according to Evercore ISI, cited in the piece.
Yeah.
Compared to maybe 10 to 15% in India at the time.
That's a huge concentration risk.
It absolutely is. And remember, it's not just iPhones. iPads, wearables, MacBooks, they're made in places like Vietnam, Malaysia, Thailand too.
And those places were also facing potential reciprocal tariffs initially.
That's right, before the broader pause or exemptions. And the article also notes that Apple's actual mass production footprint in the U.S. is almost negligible.
So no easy way to just shift production domestically overnight.
Not at that scale, no.
Okay, so if prices had gone up significantly, iPhone sales were already looking a bit sluggish, weren't they? I think IDC data was mentioned.
Yeah, the article cited an IDC estimate suggesting iPhone shipments actually declined slightly, maybe almost 1% in 2024, down to about 232 million units.
So hitting consumers with higher prices on top of that, while maybe lagging a bit on AI features compared to some competitors, that's not a great combination.
Exactly. The piece connects those dots. Samsung, some Chinese makers were pushing AI features maybe faster, If Apple's phone suddenly got more expensive and were maybe seen as slightly behind on the latest trend,
Would people still pay that premium? Tough sell.
it raises that question, definitely. And it's not just sales volume, right? It's also about profit margins.
Right. If they can't pass on all the costs, it eats into their profits.
Precisely. It becomes a double-edged sword. Lower sales or lower margins, or maybe even both.
And we saw analysts kind of reacting to this, lowering expectations.
Yeah, the article mentions analysts trimming their earnings expectations for Apple for the current fiscal year. There was some Y-charts data reference showing that trend, reflecting that margin pressure concern, likely.
Okay, so it's a tricky situation. Apple's navigating this tariff tightrope, but they are trying things, right? We mentioned India. What else?
Well, the logical next step, as the article suggests, is probably further diversification, bolstering manufacturing in countries where the tariff situation is, well, maybe more stable or favorable.
Makes sense. Less reliance on one place.
But that's not an overnight fix, you know? Shifting supply chains at Apple's scale.
Yeah.
It's a massive, complex undertaking. Takes years.
Right. Not flipping a switch. And then there was the big announcement about U.S. manufacturing. $500 billion.
Yeah, a huge investment plan over the next 4 years mentioned in the piece, aimed at strengthening U.S. manufacturing.
That sounds significant, but again, long term.
That's the key takeaway from the analysis. It's a long-term strategic play. It signals commitment, but it doesn't solve the immediate tariff exposure problem. Building those factories, getting the expertise, that takes time.
So in the meantime, they're still exposed to this uncertainty.
Pretty much, yes, in the short to medium term.
Okay, so let's pull it all together then. Based on this Motley Fool analysis, what's the outlook for the stock? How does it look valuation-wise?
Well, the consensus estimates they cited are projecting some earnings growth, about 7% this fiscal year, maybe 11% next year. So growth is expected to return.
Okay, that sounds positive.
It is, but then you look at the valuation. The stock was trading at about 31 times earnings.
And how does that compare?
They compared it to the NASDAQ 100 index, sort of a proxy for tech stocks, which was around 28 times earnings. So Apple's trading at a bit of a premium.
Meaning investors are paying more for each dollar of Apple's earnings compared to the broader tech market average.
Exactly. Suggests higher expectations are baked in, perhaps.
So given the tariff headwinds, the sort of moderate growth expected near term, and that slightly high valuation, what's the article's bottom line? Is it a buy?
The analysis leans cautious.
Yeah.
It suggests maybe, for now, investors might want to stay on the sidelines.
Just wait and see.
Yeah. The combination of those factors, tepid near-term growth, the tariff mess, the valuation, maybe makes the risk-reward not quite compelling enough right now.
But not a sell or never buy either.
No, definitely not. It suggests keeping a close eye on Apple. If the stock got cheaper, if the price came down.
Or if there's really positive news on the tariff front.
Exactly. Then it could become a really interesting buying opportunity.
Yeah.
And they also flag the long-term potential of AI. That could be a huge catalyst down the road.
Right. So it's more of a hold for now, watch closely kind of message.
That seems to be the takeaway from this particular analysis, yes.
Okay. So recapping our deep dive into this Motley Fool piece. Apple's stock definitely hit some turbulence in 2025, mostly thanks to those tariff worries. There's been some relief with that recent pause or exemption, but the uncertainty hasn't vanished.
Still lingers, yeah.
Apple's working on diversifying manufacturing India, maybe elsewhere, but that's a long game. It's not immediate.
A marathon, not a sprint, as you said.
And when you put that together with the current valuation, which is a bit elevated, and the near-term growth outlook, the analysis suggests maybe just being patient for now.
A cautious approach seems prudent based on their points.
So hopefully you now have a clearer sense of the factors influencing Apple's stock right now. Based on this perspective, understanding these dynamics is pretty crucial.
Absolutely. It's about seeing the interconnected pieces: trade, manufacturing, competition, valuation.
Right. And maybe one final thought to leave you with. Thinking longer term, you've got Apple making these huge investments in U.S. manufacturing, billions of dollars, right?
Yeah, that $500 billion plan.
And at the same time, you have AI just exploding, evolving so rapidly. How might those two massive strategic forces, the shift towards U.S. production and the rise of AI, how might they fundamentally change Apple's risk profile and its appeal to investors years down the line? Could they eventually overshadow these sort of immediate tariff headaches we've been talking about? Something to think about. Thanks for joining us for this deep dive.